And it's time now for our Muni Moment. Let's get across to Taylor Riggs.
Well, we're taking a look at bonds on ballots and Democratic governors that are now in, and no better person to discuss this with me than James Iselin, head of Municipal Fixed Income over at Neuberger Berman. First, I want to talk about some of the bonds on ballots because we had about $76 billion, highest since 2006. What does this tell us sort of about the state of the economy and where we're at?
It's a great sign. It's a great vote of confidence on the economy. If you think back to the recession, politicians don't want to put ballot initiatives on big bond deals and ask voters to approve them and pay for them. It's showing you that the state and local politicians are much more upbeat on the economy. And it's also important because we have deferred so much infrastructure spending and maintenance. It's time to get these deals done and start fixing America and hopefully pushing productivity higher in this country.
Another big issue was some of the Democratic governors that came in, Illinois, Kansas. We're still waiting on some of the results from Connecticut. Talk me first through about Illinois and sort of what that means after Bruce Rauner now is defeated.
You have to see how people ultimately govern. Bruce Rauner came in 4 years ago. He was going to be the big reformer. He was going to fix the problems of the state. Unfortunately, the gridlock there between him and Speaker Madigan was incredible, and not a lot got done. Now you have J.B. Pritzker coming in as governor. I think in the short term, it will be supportive of Illinois bonds because that gridlock will go away. But longer term, we have to see, how does he govern and can he really start to fix those bigger problems in Illinois?
Do you have any comments on Kansas? Because the incumbent came in on tax cuts and now we've flopped the other way.
It's a big shift. The previous governor's approach was let's cut taxes and we'll kind of grow our way out of it. That didn't materialize, and now voters there are sending the state in a different direction.
Now, with the elections behind us, I want to focus on where you sort of see opportunities going forward, parts of the yield curve, any sort of relief rally now that the uncertainty is behind us.
I think there will. The weeks leading into the midterms were the most apathetic that I've seen in my 25-year career. Now it's over. Markets hate uncertainty. And if you look at the 10-year spot in the yield curve right now, you can buy a 10-year AA rated bond at a yield of around 3%. That's a 5% taxable equivalent. Rates have moved higher, and I think investors, if they really start to look at the market, they're going to like what they see.
Quickly here, a lot of outflows recently. What does that mean going forward? Do you start to see some of that demand from buyers start to come back in?
I think so. We've had mutual fund outflows because interest rates have been moving higher. I think if treasuries can stabilize, supply is going to be very manageable in the muni market, and we really might be set up for a nice year-end rally.